Yo, what's up, everyone? Today we're going to be looking at four different REITs, and I've carefully selected these. So these have really high growth, high dividend growth, and more importantly, we're going to compare the core FFO versus how much their dividend costs them, and then we're going to look at how much dilution they're doing because, as we know, REITs, it's very often that they do dilution, and we're going to be looking at some that don't do that much dilution because that's how they raise capital. So yeah, I hope you guys do enjoy this video. And by the end of the video, hopefully you'll find a couple new REITs that you can add to your watch list and potentially buy. This isn't financial advice though. So yeah, I hope you guys do enjoy this. And if you do, I really would appreciate if you'd hit that like button and subscribe if you're new. We're trying to get to 1,000 subscribers. And if you look at the number, we're getting pretty close. And yeah, let's just get straight into it. All right, guys. So for the first REIT on the list, it's actually one you've probably heard of, but I haven't talked about it on this channel. It's Simon Property Group with a market cap of $37 billion. Now, I can't wait to show you some of the stats on this. Remember, they never had to cut their dividend during the pandemic, so you could have bought this and kept on that same dividend yield. Right now, it yields 6.61%, and I'm going to show you why they could raise their dividend by so much. So check this out, okay? This is roughly what their core FFO is, give or take 1 or 2%, but this is basically their core FFO. $1.13 billion. Now let's see how much their dividend costs them. Now remember, they have to pay out 90% of their taxable income or whatever. So REITs are always going to have a huge portion of their revenues paid out in dividends. But look at this one. It's not that much. It's only $606 million cash paid dividends. And let's see, are they buying back any stock? Well, they were, but more importantly, they haven't been issuing stock, which I really like to see, but there still could be some. So let's check the total common shares outstanding. And as you can see, they've done no dilution. So Simon Property Group is one of my favorite REITs because they don't do any dilution and they have a very good dividend that they could raise at any moment. Look at the dividend growth on this. So they've been raising this one every quarter, not every year like Dividend Kings and Aristocrats. They've been raising it every single quarter, probably because it used to be really high in 2019. They cut it, but look, I think it's going to go above what it was in 2019. So you're kind of riding back the wave on this one if you're kind of betting on the economy. So I really like Simon Property Group. They know what they're doing. It was a smart move for them to cut their dividend back then. I'm not saying that it was bad. What I was trying to say is they didn't have to stop paying a dividend. They still paid a dividend, even though it wasn't as much. It's still like half. It's really good. So yeah, let me know your thoughts on Simon Property Group. I didn't realize it was this good. So yeah, let's go ahead and get into the next REIT. All right, guys. So for the next REIT on the list, it is actually ticker symbol HR. And man, is this one a buying opportunity? So, well, I guess you can decide that after I show you the stats. But look at the price on this. It's basically at that COVID low level. Now let's go ahead and look at the dividend yield of 7.4% right now. Let's go ahead and see if they can cover that. I'm going to go ahead and tell you they can easily cover that. So let's go ahead and look at the financials. So what we want to really look at here is the assets versus liabilities. As you can see, that looks very safe. Nothing wrong there. But let's look at the core FFO of $185 million. So that's what is the main thing. And look how good that number is. Now let's see how much their dividend cost them. All right, so their dividend cost them 118 million. So they can easily cover that based off their most recent quarter. And if we go ahead and look at their total common shares outstanding and the issuance of stock, they've been buying back their own shares for the past 3 quarters. Not that much, but hey, still, it's very unusual to see in a REIT because most REITs don't buy back stock. And if we look at the total common shares outstanding, we can see that over the past 4 quarters, yeah, they no new shares have been issued really, so they haven't been diluting any shareholders in any way. So HR, this one could be a really good buying opportunity if you like this sector. Let me know your thoughts on HR. This is probably one of the more risky ones on the list, but hey, I think their core FFO and assets versus liabilities are very safe. And this one I would consider buying. All right, guys. So remember how HR was at that 52-week low? I think I know why. Because look at Medical Properties Trust, a very similar industry, though not the exact same kind of properties. Look at this. This one basically at that also. This one, HR hasn't fallen nearly as much as Medical Properties Trust. But man, this is crazy to see because I remember people loving this one. This one has a yield, 17% yield. Talk about a yield trap. But yeah, let's go ahead and get into the next REIT. And yeah, that's just a REIT that you shouldn't buy. All right, guys. So for the third REIT, it's actually ticker symbol AMT or American Tower Corp. And I know what you're probably thinking. Yo, what about all the AT&T, Verizon madness right now? Well, I'm going to show you why that hasn't had an impact on earnings. Well, let me show you. Well, first off, look at the chart on this. You could go ahead and buy this at 52-week lows. Man, all the REITs are at 52-week lows. It's so sad. But hey, that makes a great buying opportunity. But let's look at the core FFO of 1.21 billion. Wait, first I want to check the dividend yield. What is the AMT yield right now? 3.55%. Okay, that's pretty cool. Yeah, the core FFO here is $1.21 billion, up from 1 year ago. Look at the consistent kind of growth here. But now let's go ahead and look at the total cash paid dividend, and it's only 727 million. So as you know, they have a lot of room to grow it. And as you know, they have been growing it because they've been raising their dividend every single quarter. So now let's look at the total common shares outstanding. It's at 766 million, and basically no changes from 1 year ago. So they haven't been doing that much dilution at all. As you know, Realty Income does so much dilution. None of these really have. But let's go ahead and look at the dividend growth on this one. Like, look, it almost goes up every single quarter except for last 2 quarters. But yeah, look, it basically goes up every single quarter, and they've been doing this for years. So if you held this in, let's say, 2019, you were at 90 cents. Now you're at $1.57. So just the dividend growth on this one is absolutely nuts. So this is yielding at its highest percent. Basically, it's almost ever been 3.55%. It's at a 52-week low, and it grows their dividend it's a compounder, man. So let me know your thoughts on ticker symbol AMT. There could be some short-term risk with the AT&T Verizon madness, but I just see it as a short-term issue, and it should go away in the future. Let me know your thoughts on American Tower Corp, and let's get into the last and final REIT. All right, everyone. So for the last and final REIT, I had to go with the one I'm most convicted in because I might be biased because I own a lot of this stock, but it is ticker symbol EXR, or Extra Space Storage. And I'm going to go over the reasons why I don't think it deserves to, be at this price right now. But yeah, let's go ahead and look at the earnings and everything. And right now the yield is it's not 3.18%. It's calculating that based off this bonus dividend that they paid. They annualized this number, and that's how they got that number. But the dividend is actually 1.62. So this is yielding, I'd say, around 5%, if not a little more than 5%. I can't say exactly because it doesn't tell us, but I could probably go look it up. Anyway, let's go look at the financials. All right. So let's go ahead and look at the core FFO right here. So it is $347 million. So it's slightly down from 1 year ago, but that's not that big of a deal because they've seen some core FFO impact from interest rates. And if interest rates weren't a thing, then their core FFO would be a lot higher. But let's go and look at the total cash paid dividend. So even with the interest rate like slowing of core FFO, the dividend literally only cost them $218 million. So it doesn't even cost them that much, and they can raise it if they wanted to. And let's go look at the issuance of stock. So they haven't been issuing stock. If anything, they've been buying back stock. Not that much, but they've still been buying back stock. If you look at the total common shares outstanding, it's gone up just slightly, just over like a million shares from 1 year ago, but that's not that big of a deal because this is one of the biggest REITs by market cap. So I guess let's just go ahead and look at all the numbers here together. So I wanted to show you them. Like, look at the net income here, the operating income. Let's look at the net margin. Net margin is 39%. That's the power of the self-storage REIT. This is free cash flow per share, so $2.50. They could, and they only pay $1.63 of that, to dividends. So they have a lot more free cash flow per share to do whatever with. And you can go ahead and look at the growth here. They didn't, like I said right here, they didn't lower their dividend. This was a special dividend that they did from an acquisition. But in this acquisition with LSI should bring synergies of, I think, over $200 million. But look at the dividend growth on this in 2020. Just 2020, this was 90 cents. Look, it never had to get cut, but now it's $1.60. So that growth is insane. That growth from Extra Space Storage. And let's go ahead and look at the stock price on this. All right. So as we can see, it's well above pre-pandemic prices, but it has fallen quite substantially in the past couple weeks here. And that's why I think extra space storage could be a really good buying opportunity because we look at the core FFO. The core FFO wasn't even that bad. It was, if anything, it was decently good. And they have room to grow the dividend. So that's why I love extra space storage. Let me know your thoughts in the comments. And thanks again for watching. If you really would, I would appreciate if you'd hit that like button and subscribe if you're new. We're trying to get to 1,000 subscribers, and if you look at the number, we're getting pretty close. And you also check out these 2 videos up here. My name is Nathan Robert. I hope you have a fantastic rest of your day.